I'm Regan Bozeman, your host. Welcome to another episode of the Token Warrant. We're joined by Joe Flanagan from Maple and Steve Venino from BlockTower. Guys, welcome. Thanks for coming on.
Thanks for having us, Regan.
Awesome. Joe, maybe we'll kick it off with you. I think probably a lot of listeners are familiar with Maple, just given, it's kind of been like a DeFi stalwart for the last few years. But for anyone not familiar, maybe a quick background on you, how you got into crypto, and then, Maple, what y'all have been up to over the last few years, and maybe what the core product looks like today.
Sure. Great to be here, and thanks for having us, Regan. Maple's founding goes back to Melbourne, Australia, where Sid and I were based and working together previously in traditional finance. And as part of that, we were working at a commercial lender, and so taking balance sheet assets and putting them out into institutional debt deals, into securitization vehicles. And it was going through that process that required 6 months of due diligence, all of these legal documents, and all of these setup requirements with third parties that led us to looking for technological solutions to solve this unbelievable friction and cost that existed for initiating any institutional debt deals. And we weren't in crypto at the time. So we maybe held a little bit of Bitcoin or Ethereum, but we really didn't know anything about it. And as we were exploring potential solutions to the problem we encountered firsthand, that's when we came across smart contracts, Ethereum, and down the rabbit hole we went. And we spent the first 18 months building ourselves, funding everything ourselves, and trying proofs of concepts for different ways that we could bring institutional debt on chain and facilitate the efficiencies that we were looking to bring to institutional debt markets. One of the first proofs of concept that we built was actually on top of Compound, and that's where we got our name, where we did a securitization structure. And a debt structure typically looks like a stack of pancakes, and the cash flows go down a debt stack like maple syrup over pancakes. And so that was our initiation into DeFi, and that was when Compound had $25 million in it. So really before DeFi was DeFi. And since then, we then raised money and started to build out the institutional lending platform. And what we learned from that proof of concept is that there's no institutional grade assets that exist on chain. So there's nothing to actually securitize. And so we needed to originate the lending assets ourselves. And that's what Maple really is today, is its core infrastructure facilitates the end-to-end issuance and flows required to issue and manage institutional debt on chain, and achieves all of those efficiencies that we were looking to bring to institutional debt in the first place. Since our inception, we've originated over $5 billion in loans. We've grown pretty significantly to today have over $600 million in assets on the platform. We've obviously been through the highs and lows of debt capital markets on chain, which I'm sure we'll get to. But that's where we're at today, where we are facilitating the lending using that infrastructure that's originated so much on chain already, and lending out to the largest crypto native institutions in the space.
Awesome. Well, definitely want to get more into all of that. But Steve, maybe to kick it over to you, just like an intro on yourself, BlockTower, how you started working in crypto.
Yeah, definitely. And thanks for having us on. Joe, good to see you in a different setting than the typical updates. My background, less cool name than Maple, and that being derived from the credit waterfall process, which I think is so cool. I've been in finance for the last 10 years broadly. The first half of that, like many, I started on Wall Street. So started my career at Morgan Stanley on the trading floor within equities and derivatives. Wanted to move away from being a trader specifically, and then moved to the buy side of Point72, which is a hedge fund that was previously more infamously known as SEC Capital. And there I was still on the public equities and derivatives side of the world, having managed a long short portfolio in that space. After a couple years of that, I decided to move away from public markets for a topic that's probably best for another podcast episode, but wanted to move to the private world, spend a year kind of transitioning at a early stage generalist VC fund before making the move full time to crypto. So about, I guess it was around 2020, was kind of looking to put aligning my personal interest in crypto for a number of years at that point to align it with my career interest and trajectory, and kind of had that aha moment that this was not just Bitcoin's a store of value, but something that I need to be part of for my career. So I had the opportunity to join a firm called 10T. It was an early hire there, and we invested in companies in the growth equity space and the crypto space. So at the time, and I think still maybe today, especially how the markets were for the last couple of years, there's no dedicated growth, dedicated crypto fund, right? There's a lot of growth funds that do crypto and non-crypto. There's a lot of crypto VC firms that do early stage and growth, but there's this big white space for only growth equity, only crypto. So we invested in a number of businesses like Ledger, the hardware company, Kraken, Deribit, Figment, Helium, Animoca Brands, Ledin, also in a different flavor of the borrow lend space. And so did that for a bit, and then had the opportunity to join BlockTower in Q1 of 2022. So coming up on 3 years, and joined my partner Thomas to help expand and roll out a venture franchise there. I guess taking a step back on BlockTower more broadly, BlockTower was founded in 2017 and was really one of the first crypto native firms in the space, founded by Ari Paul and Matthew Getz, former U Chicago Endowment, Goldman Sachs, kind of bringing that professional, institutional, TradFi professionalism to the crypto world. The first 5 years is primarily a liquid hedge fund. In 2022, with the launch of the venture fund, we also launched a credit vehicle. So for the last about 3 years, the firm's had the flagship hedge fund, trading all the liquid names, a credit vehicle, and then the venture fund, which I spend 100% of my time on. And that venture fund is, $150 million early stage VC fund that invests in pre-seed to Series A primarily, though, we can kind of play outside of those bands. And we're very excited and privileged to have been a core holder of the Maple token for, I guess, a number of years now. Really one of the first investments in our fund. So that's kind of us in a nutshell. We're a core team of 3 on the venture side based in New York.
Awesome. Well, I feel like it's like an old reunion. Like I've known Joe for, I guess, since like 2020 or 2021. Before starting Lattice, was kind of just like doing some consulting work for a handful of projects, mostly DeFi, I think, just because primarily at the time that was like the interesting thing in crypto. And so it's been really exciting to see, Joe and Sid and the team really execute on it. I guess, Steve, maybe like just like some background on the relationship with these guys in Maple. Like, how did you first come about it, or liquid positions kind of part of the core strategy? And like how did you guys kind of first form a thesis on Maple?
Yeah, definitely. So the BlockTower Maple relationship, I think, predates myself, and Joe can probably speak better to that. But the firms have been, very close. We had a market neutral fund kind of around the time of the venture vehicle, which was a delegate for the kind of V1 Maple and very active on that front. So we were, as a firm, working very closely and close personally, based as a headquarters down in Miami, with the Maple team, and spent a lot of time with them. So we, to your question on the liquid front, we do own a number of liquid tokens, some of which we've acquired from the treasury, some of which we bought using kind of trading software ourselves, and then some of which, we invested in equity and they launched a token. Maple is an interesting one because it was probably the first and one of the few times in the portfolio we've, prior to the round that we helped lead, Joe, in 2023, I guess it was, we had just acquired the token on the market. So I guess I don't even know if Joe and Sid had known that. They probably did because we were speaking with them and doing our sort of diligence with them as founders. But it's what's nice about the portfolio is that we're flexible in how we can acquire positions, how we can optimize them through staking, which we had done with Maple, and now excited to do with Syrup. But back in 2022, right when the fund was launched, we acquired the token on the open market through OTC brokers, through trading software, built up that position, and then I guess I won't jump ahead too far, but in Q2 of 2023, we had sat down sort of in the depths of the bear market and decided to kind of quite literally 10x our position that we had built up in the open market through the round that we had co-led with DeFi Capital in 2023. So that's, there's this long-standing relationship between BlockTower and Maple. to answer your question, various funds had worked with the Maple team in different capacities as delegates back in the day, so to speak. And then, we just, we love the team, we love the product, the brand they built, and we built up a stake and have added to it since.
All right. Well, sounds like you guys you're like high confidence holders here. Maybe Joe, to parallel that, I mean, you just like walk us through the product evolution at a high level. I feel like crypto lending is this like fascinating space where like you kind of had a lot of these like centralized hybrid approaches. A lot of them blew up. It's been like, it's changed a lot over the last 3 years. And I know the Maple product has as well. So maybe like what was like the core product day one? How has that evolved? And what does it look like today?
Yeah, so when we launched, and you were obviously you were involved as an advisor in the early days when we launched our seed capital and our first pool. And the intention and the way that we structured things originally was that we would provide the infrastructure, and then credit underwriters or lending experts would be able to come and use our infrastructure to facilitate their lending business. And we viewed this as a more scalable way to build out a full service institutional lending marketplace. And that worked really well. And we had some really great delegates, including BlockTower back in the day, that came onto the platform and leveraged our infrastructure to raise capital, but then mainly to issue the loans and to have that full end-to-end experience of being able to create a product where they could access global capital markets through it being available on chain, and then all of the end-to-end efficiencies of issuing the debt. But as the other thing that's important to note there is that we were solely lending unsecured to market makers. So all of the largest market makers in the space were borrowing from the platform, and then the credit underwriters that were utilizing our infrastructure were responsible for managing those relationships and issuing the loans to them. What we saw as the market started to unwind in 2022 is that overall, our delegates and with our assistants did a fantastic job in terms of credit management. We never lent to 3AC. We wound down Alameda 5 months before they blew up. And so we avoided all of the big calamities of 2022. But we still did have a few defaults and restructures that happened. And what our thought process was in the way that we'd structured things is that there would always be separation between the credit underwriters on the platform and what their responsibility was and what our responsibility as the infrastructure providers were. And what played out in reality was not that, is that everyone piled on the blame that it was Maple, and that the clarity of the separation between roles and us as an infrastructure provider just didn't really exist. And so as we went into the bear market, and one important point to note here is that we never quite touched $1 billion. I think we were like 980 million that we had in deposits on the platform. We in January of last year, so not that long ago, we went all the way down to 15 million. And so we really had to reset. And part of that reset was that we decided that we were going to bring all of the risk management, credit underwriting in-house. We already had that expertise. That's our background. So rather than relying on third parties to come and originate debt using our infrastructure, we will leverage the fantastic infrastructure that we've already built and be the facilitator of those lending markets and originate the debt ourselves. The other element is that we would only do secured lending. So we moved away from unsecured lending and focused solely on doing over-collateralized lending, still to all of the largest institutions in crypto, but creating a product that lending capital was going to be willing to allocate to in the depths of a bear market and with all of the lessons of last cycle still in mind. And that is one of the key differentiators of the product that Maple provides, is that if you think about all of the big blow-ups of lending desks last cycle, Genesis, Celsius, BlockFi, etc., is that this just was black box lending. Aggregate capital, mainly from retail, with no requirements to provide any transparency. Maple is the complete opposite of that. When you come to the platform today, you can see every underlying loan that's been issued because it's been all issued on chain. And then you could also trace all of the counterparties and where the collateral is being housed. And so you can see in real time what's the amount of collateral held against this lending position, when would a liquidation happen, when would a margin call happen. And so everything is fully transparent. And that is what we see as our real differentiating factor from a product perspective, is that we are generating yields based on the opportunities that exist in institutions across crypto, but then leveraging the benefits of the technology that crypto provides in order to provide a superior lending product, which, if you date back to our founding story, was the whole reason we got into this in the first place. And so that's really what we provide today, is a superior yield product in combination with a superior transparency product. And we think that defines what the lending markets of the future are going to be. One of the key things to call out, and why we appreciate the BlockTower guys so much, and hope that they benefit from this investment a lot, is that it's very easy to support companies when they're going well. And it's much harder, and especially as a liquid fund, it's very easy just to go and buy things on market when things are going up. It's much harder to take long-term risk-on bets based on an underlying thesis on a company and an understanding belief in the founders involved. And that's really what BlockTower did for us in leading our round in the middle of last year, is that it was very easy to pass on us, right? There's not that many opportunities out there. They're just another lending protocol. They've gone effectively to zero. It's easy to pass on. But they saw, hopefully, the opportunity and are now reaping the benefits of it by allocating fresh capital to us that would sustain us through the bear market and enable us to turn things around. And that's really what we've been able to do in going from 15 million at the absolute bottom to now 600 million and really being and positioning ourselves as DeFi's institutional lender.
Yeah, and I'll just, Regan, sorry to jump in, but just want to double down on one point from Joe, and Joe, appreciate the kind words about our partnership, which we appreciate all the good work you guys do. But I think the key thing, I was thinking about this earlier today before the podcast, but the reason that we made that investment, we had such conviction to do it in the depths of the bear, was the team, right? The tech, the brand is all amazing. You can write your investment memo about all of that, and we did. But it's really, as Joe said, it's a broader team, and to go from, I'm going to say $1 billion, I'm going to round up and be generous for you guys, Joe, but to go from $1 billion in TVL to 15 million, I mean, that is just psychologically crushing. To not, it'd be so easy theoretically to throw a towel in and be like, let's do something else, this or that. But to see these guys not just not do that, but to be extremely optimistic, to pivot, to lean into what is working, with real world assets and sort of the proper transparent underwriting at the time, it was a no-brainer once we kind of connected those dots, and we already had that relationship. So we're very glad that we did. But really just want to emphasize that point, to see that happen, to see this massive top of the world credit business, and then see it go down for largely other people's faults. It's not easy, and to see that handled so well, so professionally, with such a positive mindset, it was just it made the investment really that much easier, and that's really the key takeaway as we thought about underwriting it.
Yeah, there's not a lot of second acts in crypto, and so definitely a ton of respect to you guys for kind of how you handled working through the downturn. Would love to kind of unpack some of the mechanics of Maple and businesses there, and maybe get both of your views. I guess on the under-collateralized lending side, I mean, a handful of people have kind of tried to make these products work on chain. I feel one of the fundamental issues is once you take collateral off chain, right, you're kind of introducing this gap in the system where it being on a blockchain doesn't matter. And there's always you kind of default to legal recourse. Do you think these truly under-collateralized lending systems a la Maple V1 and Clearpool, and I'm sure there's some other ones today I'm less familiar with, do either of you guys think these will ever work?
Joe, I can go first, my answer might be simpler, so I'm happy to go first and let the professional take it away after and tell me how I'm wrong.
I thought that was your job.
I guess on our own capacities. It's one of those things that I want to work. I'm skeptical that it will. I think you kind of hit the nail on the head about the recourse ultimately being a legal thing, right? And the core part of crypto is being borderless and global. I mean, it's part of why Syrup is happening, right? To tap back into that broader permissionless world. So if I'm borrowing on chain and uncollateralized, like you don't know my whole picture. You don't know if I have 10 other loans somewhere else. Like you can never know, right? And the only reason we know in the real world is because there's the reputational, the social, the legal recourse of where you live and the jurisdiction you're in, right? And that's inherently constrained and not porous. So again, like Joe, love to hear your opinions, and I don't think it takes away from what's been built in the space, whether it's Maple V1 or any of the other dozens of credit protocols, but to really get it right and almost simultaneously promote the benefits and the things that are exciting about this space, which is like borderless and trustless. I think are somewhat at odds. So I want it to exist, and I hope I'm proven wrong, and that I might be. But I'm definitely cautiously skeptical, just based on a number of what seem like inherent limitations. I mean, things like zero knowledge proofs and other emerging technologies might help mitigate some of those concerns and can lead to something that really gets it right. But yeah, I think that's how I would sum it up. But would love to hear, Joe, your take and if it differs from mine.
Yeah, so I think the key is if you want to extend unsecured credit, and if you want to extend credit to anyone, then you have to do credit work. And so there isn't this world in which we can live where kind of just everything gets automated on the credit underwriting process. And debt gets overly complicated by people, right? Debt is very simple. There's only like 3 elements to any debt transaction, which is facility required, security, and ability to repay. And when you remove entirely the security, or as you're saying, make that only reliant on legal enforcement, then it makes the lending arrangements very hard to scale and makes it all purely based on trust. And one of the big things that the ecosystem is trying to build out and facilitate is trustless economies and trustless markets. And so I think that's why we've moved only to secured lending. We think that that's a better market for lenders to be able to allocate capital into. And that's not to say that unsecured lending or under-collateralized lending won't exist in some way and that it's not required. If you want to see an economy expand, then you have to extend credit. But are there other ways that we can utilize the unbelievable benefits of blockchain technology to be able to facilitate that in a new way? And I think that's the exciting part. Like you're starting to see some of, zero knowledge proofs and things like that to help underwriting processes. But then are there ways that for financial services companies in crypto, we're starting to see that you can have on-exchange margin, all right? And so you can be ensuring that what you're underwriting to is transparently held within a certain framework, and that you have the ability to access the capital and in real time track the P&L and assets that are sitting there. The other thing that will be unlocked is when more and more assets come on chain, that's going to expand the world of addressable markets for lending. And that's like what we're really excited about over the course of the next 5 years, is that currently the world of secured lending in crypto is very limited to only taking digital assets as collateral. Now, that's great for someone posting Bitcoin and borrowing dollars, but that's a kind of a limited world or limited use case. And as the crypto economy expands, as more assets get tokenized and come on chain, we're excited that we will have the infrastructure to be able to supply and provide institutional lending markets for these assets. And that's where we see our market size being relatively small in the context of institutional debt markets globally, but starting to expand as more institutions come on chain, as more verticals get integrated on chain. The addressable market for institutional lending and for Maple in particular is only going to expand with it.
Maybe like just digging into that more, I feel like that kind of like touches on this like broader real world asset narrative. I mean, I think the way we talk about it internally is like, people talked about like security tokens in like 2018, that never went anywhere, kind of got rebranded as real world assets, kind of the same thing, right? But like, our view has been like stable coins are kind of the first like real world asset. They're the most fungible, liquid. The US dollar, a handful of financial markets and blockchains have existed around that. Now you kind of see like tokenized treasury bills, a slightly less fungible and liquid form of dollars taking off, and it's kind of going down the stack. in terms of fungibility and liquidity. Where do you think we are today? Like what types of assets are really on chain that people are securitizing against on Maple? And like, what does this look like in 5 years? Is it like every Netflix royalty payout is on chain and people can, borrow against that? Like, curious of both your guys' views on like where we are today kind of in that cycle, and then like where do you think we go from here?
Yeah, I mean, I think you hit a lot of things that resonate, right? Like a lot in crypto that's popular was popular 2 cycles ago and is kind of rebranded. And I think the real world asset space is interesting because like as bull markets come, it's sort of like counter cyclical in a sense, right? Like all people care about in the bear market is real world assets, and now that funding rates are ripping, like people care more about not more, I should say, but it becomes less sexy to own like treasuries on chain, but it's still a huge and growing thing, primarily because the big asset managers like the BlackRocks and the Giant Hendersons are coming into the space in a big way. So yeah, I think there's definitely a path to bring more on chain and theoretically like everything of value that you'd want to borrow against on chain. I think it's interesting because if you think about the consumer side, borrowing is really like, credit cards and mortgages. If you think about an auto, right? If you think about assets for the average person, not like the super wealthy or something. But so if you think about the consumer side, you kind of have to this psychological shift of you don't really, even if you have an account at Fidelity and you have $1 million portfolio of stocks, like most people don't really borrow against that. So a lot of those assets, I think, you can bring more and more assets on chain, but there'd still be kind of like a net new consumer behavior to think, oh, let me just borrow against all these. So I know it's kind of like I'm excited by all these more assets coming on chain. I think especially in a more institutional sense, it's very exciting. But I think the obvious things are, like you said, having for consumers, especially like dollars on chain. So I think 5-10 years from now, every wallet is really stablecoin based, and it's not even like it's crazy to think we grew up in an era where checking accounts were 0%, and like you kind of have a whole new unlock for consumers where you can just have a digital wallet that inherently has a yield component to it, and like stablecoins as being the product in crypto with the clearest product market fit. To your point, kind of what you said earlier, Regan, around those being the real digital dollars being the real world asset. And then things like Maple will be underlying the yield component of those consumer wallets and savings accounts, right? It all kind of like blends with the real world and fintech coming into what you can do around spending and the yield you're getting on dollars when you're not spending them. So I know I spoke a little around there, but I think it's a no-brainer that in the institutional sense, a lot in terms of assets can be brought on chain and borrowed against. I think it's a different consumer behavior, though the path to that looks more like your digital wallet that's also seamless payments and yield bearing inherently. And that's like a really powerful, exciting vision that we're skating towards. And it's partly stablecoins and it's partly people like Maple are going to be powering that infrastructure underneath the hood.
Yeah, and I mean, our view is that there's lots of smart and great entrepreneurs out there that are focusing on the tokenization of real world assets. We dabbled in it a little bit during the bear market. We had our own treasury yield product, but we are, exclusively focused on bringing lending markets, institutional lending markets on chain. And we think that a lot of people, or at least a couple of these firms that are trying to, will solve this tokenization of real world assets. And what we will be there waiting with is the actual utility, because tokenizing an asset doesn't actually do anything other than bring it on chain. It doesn't bring any utility to it. It only brings the potential to create things. And that's where we will be able to provide real utility by utilizing those assets and creating institutional lending markets with them. And so that is the exciting part. And I think that things like treasury yields coming on chain is great for crypto natives, right? Great for crypto natives to be able to access the treasury yields on chain for the first time. But there is not a single institution in the world that is going, let me go get my treasury yield on chain now. And so that's where the product suite that we're creating has to be differentiated. It has to be net new functionality that goes to an institution and says, all right, you're going to access a new financial primitive. You're going to be able to create a new financial product that you can't create in the traditional world, that's going to get them excited about the potential of blockchain technology, get them to bring their capital on chain and start the flywheel of the expansion of capital on chain. Because that's really what we need to happen this cycle. Is everyone's always talking about the institutions coming on chain. We don't just need them to be going and buying Bitcoin ETFs. We actually need their capital to be flowing on chain into DeFi and starting to experience the benefits and new financial primitives that are being built out. And I'm sure we might get into it with the next question or two, but that's what is so exciting about a Trump administration, right? Now we've got potentially a path to helping to facilitate it. And that's why we think that it's super exciting for Maple and to be at Maple, is that we sit at the juncture of those two things, of institutions and DeFi. And so that the opportunity couldn't be more exciting for us as we move into 2025 and the potential of more and more institutions coming on chain and looking for products like the one we provide to be able to access for the first time.
I mean, I think it's a good segue. Like, yeah, would love your view on, how has regulation kind of constrained your guys' ability to build out Maple over the last few years? And how does that change going forward with the new incoming administration?
Yeah, so obviously you can hear with my accent, I'm not American, so I don't get a vote. Putting pure politics aside and just talking about it from a crypto perspective, is that the benefits that are going to potentially come with the Trump administration and the appointees that are made to the heads of different regulatory bodies is going to be a huge unlock. If you think about the DeFi landscape today, it effectively doesn't exist in the US. 50% of the capital markets of the world are here, and really there's no proper utilization of DeFi at all within the US. As a founder, we have to go out of our way in order to facilitate any business here, and we do facilitate business with Maple and our institutional side, and have accredited investors only, and a full permissioning system that we built on chain, and all of this stuff. But for the most part, founders go, screw this, I'm not going to waste my time and deal with not only the headaches of trying to facilitate markets here, but also the potential risks that come with it. So I think that is going to be a huge unlock, right? Is that for all of existing DeFi, they're going to get the potential to operate within the largest capital market in the world for the first time. And then just speaking for the space more broadly, is all of a sudden every American entrepreneur or kid that's going through all the great universities here is going to go, well, rather than seeing like all of these crypto idiots that are getting locked up and chased after by the SEC, they're now going to see it as like an opportunity space to move into and become an entrepreneur, and not see it as like this massively differentiated risk reward versus being an entrepreneur in other industries.
I certainly hope so. I mean, I'm optimistic that definitely like actual policy, and I think like cultural attitudes hopefully change as part of that. I mean, Steve, maybe on your end, like, kind of just be curious, like how like the house view at BlockTower, your view on like DeFi. Like, it's kind of had a resurgence in the last month, but I feel like maybe for like the last 18 months, 2 years, it kind of has been a little bit of a bear market where like, I mean, obviously, there were some blowups around FTX and that sucked a lot of liquidity out of the system, but like, it feels like there have been shinier objects elsewhere where like a lot of investor attention has been focused. Like, do you think that changes going forward now with the new?
Yeah, I think absolutely. I mean, it's like black and white, very exciting. I don't think this is a headline that gets faded, so to speak, using trading terminology. Like, this is regime shifts, fundamental changes. I mean, there'll be a degree, a spectrum of how much. Like, we're very optimistic now and hopeful. But frankly, like the last, to your point, 18 months, like the stuff you can invest in DeFi, like Maple, we're building these permission products that were allowed to be built, even though like the frameworks here have still been quite unclear. So it's almost a sigh of relief. Like now we can, in our underwriting of a new deal, if it's in DeFi, a big weighting, whether it's explicit or implicit, was like, is this company based in the US? And hey, we've asked multiple founders in diligence, like, if something happens, are you willing to move to country XYZ, not the US? Like, and do you have a family? Are you going to uproot them? So it's these things that, as providing venture capital, as backing entrepreneurs, you don't want to have to think about. There's enough challenges, as Joe can tell you, like running a startup, right? So it shouldn't have to be, the problem was that it wasn't just bad regulation, like it was purposefully no regulation. It was people on the other side willing to like help create policies and present ideas, and it was purposely shooting them down. So you had no ability to really, like, you're flying blind. So yeah, I mean, it's very exciting just from like the one part of the question, like the DeFi perspective. Our current founders who are based in the US, how they can feel comfortable underwriting new founders, whether in the US or otherwise. And I think you see, we're going to see sort of this like fee switch season, right? You saw Athena, another portfolio company, the day after the election, the proposal to turn on the fee switch. So you're going to see a lot more like that, where people now feel comfortable. Obviously, Uniswap is like the main example of forever, like this cash flow machine. Can they actually drive value back to investors? So it's very exciting. I think also lastly, to run Regan, like we say internally a lot that this industry is obsessed with like moving on to the next shiny thing. For better or worse, if you're a long-term investor, it's maybe for the worse. If you're a trader, maybe it's for the better. It can trade narratives, but I think, in some sense, a shiny thing here could be like having proper frameworks in the US and being able to like divert attention here without being scared or thinking about these tail risks that you shouldn't have to underwrite when you're doing VC. So yeah, in a simple sense, very exciting. And we're optimistic about how this can continue to evolve beyond the last 2 weeks. And I think the actual last point is, to your point, Reagan, like even with Bitcoin at all-time highs or flirting near all-time highs up until the election, right? It's been kind of sideways and choppy. Alts, like if you had a bag of alts, if you had a portfolio of alts, they've been smoked. I mean, Maple's actually the only outlier that's been up this year, which is amazing. But like, I think the average, I'd have to go back and check, but the average alt's down like 20% year to date through Q2, Q3, outside of select themes like AI that have different idiosyncratic catalysts. But yeah, it's been very explicit in price action. And it's been really painful for people who are long anything besides Bitcoin for the most part.
Yes, painful for for crypto VCs who tend to not hold Bitcoin.
Bitcoin and Maple.
Yeah, no, I agree. I think there's a lot to be excited about. So we're recording this November 18th. Joe, you guys did a big token migration last week, right? Mm-hmm. Maybe at a high level, like what is Syrup? Why migrate the token? What's the new product associated with that? And as we're kind of nearing the end of the episode, maybe just like looking forward next year or two, like what are the big things on your guys' roadmap?
Yes, we launched Syrup token last week, which was the conversion from our previous token MPL to Syrup. And so there was, we really see this as, and I see this as a line in the sand moment, and it really dates back to our recovery from FTX and bringing all of that together. So when we did the raise led by BlockTower last year, we then had to increase the size of our balance sheet and increase our token supply. And so we had a vote from the community towards the end of last year that passed that. And we didn't have an immediate need to do it. There was no pressure to do it. And so we kind of waited on the sidelines and made sure to do it at the opportune moment. And when we launched the Syrup protocol about 3 months ago, and so just to give context to that, is that we have Maple Institutional, which is one distribution arm for lending capital, which is where it's accredited investor only, fully permissioned KYC available in the US. And then we have Syrup, which is our permissionless DeFi distribution arm for lending capital. It integrates out into the broader DeFi ecosystem and so enables the DeFi ecosystem to access the institutional lending yields that we're facilitating. We're integrated into products like Pendle and other things like that. So you can think about it where the yield is able to be an underlier not just to access directly, but building out new financial primitives using the benefits of the DeFi ecosystem. And so when we launched that, and its initial success kind of created this opportunity to bring the entire ecosystem under one banner. And so rather than just issuing the new token and it still be called Maple, we wanted to galvanize and grow the community, recapitalize our balance sheet, and then set ourselves up to be able to distribute the value that we were beginning to create. And so that's really everything that's happened with the Syrup token launch, is that existing MPL holders are able to convert 1 for 100. People are then able to obviously go and acquire or swap into the Syrup token. And then the big utility function that comes with the launch of the Syrup token is the introduction of staking. And so that's where we, through rewards, we share the economic value that's being created by the Maple and Syrup ecosystems. And so where one of the big things that we've believed in from the beginning is that there's no segregation of value. So we don't have separate equity entities sitting anywhere that aggregate value or anything like that. The same tokens that I hold are the same tokens that Steve's company holds or fund holds, the same ones that Johnny on the street holds. And so that same alignment of incentive and value accrual is super important. And that's what the Syrup token represents, is that with the launch of a permissionless DeFi protocol, we're able to bring our community under one banner and then set ourselves up to be able to grow and expand what that ecosystem looks like. And so what that will look like moving into 2025 is that the staking is only one aspect of it. And what we want to align is that we provide institutional quality lending yields to anyone who wants to participate, but that by being a token holder, you start to accrete other value. So if you're lending and staking, then you will start to get other rewards and incentives. And we start to turn the ecosystem into something that's exciting, where I want to be a token holder because I'm not just getting the value that the entire ecosystem is generating, but I'm then getting incremental value because of the way that I'm participating in the protocol. And I think that combination of utility within the product offering, as well as then value accrual from the entire ecosystem, is going to be what all tokens should aspire to. And to some of Steve's points before, is potentially what gets unlocked with the new administration and some new regulation, is that there can be transparency and clarity around the way that value can be distributed to all token holders. The final thing I'd add for 2025 is that Syrup will continue expanding into the broader DeFi ecosystem. It's already up to 300 million in TVL and will continue growing. And then on the Maple institutional side, we really see that as our ability to go and raise more and more sophisticated capital. And that the macro and regulatory environment is uniquely set up where you've got declining yields in the real world, increasing yields in the crypto markets, and that Maple is uniquely positioned to go and raise capital from institutions and from more sophisticated capital in the real world to come and access that imbalance or separation that's going to continue to increase in yields throughout 2025, we believe.
You're getting me bullish. This is there's a lot going on. Awesome. Well, I really appreciate both you guys coming on, running us through it. It's always fascinating. I feel like DeFi is really at this just like very interesting fork in the road. And yeah, I mean, it's one of the things that clearly is working in crypto, and it's worked in spite of a lot of like real regulatory headwinds. So it'll be really interesting to see kind of what happens with some of that pressure removed. If people want to follow you guys, Steve, maybe pitch you, Joe, maybe earn some of that yield and some Syrup tokens. What are the best ways for people to stay in touch or follow along?
Yeah, I mean, I'm on Twitter, Steve Venino 33, very original. Also on email, sv@BlockTower. So we are a generalist crypto fund. So we have specific theses and verticals that we spend more time in. Real world assets has been a big one for the firm and for our fund. So always happy to hear any and all pitches, and looking for the brightest minds in the space. So welcome the conversation. And thank you for having us today. It's been super fun.
Yeah, no, it's been great. Thanks, Regan. Anyone can contact me on Twitter or X, Joe_DeFi. And I won't give out any others because I get spammed enough on Telegram and email from would-be exchanges and anyone else trying to exploit me. But yeah, Joe_DeFi on X is the best way.
Joe_D. That's a great Twitter handle. This was awesome. It's a really good conversation. Appreciate you guys coming on. Yeah, thanks for taking the time.
Cool.
Awesome. Thanks, Regan.